Hey, Kelly, the Fed Beige Book saying that late April, early May economic activity was little changed, with 4 districts seeing a small increase in activity. 6 had no change, 2 saw a slight decline. Growth expectations, however, did deteriorate a little bit. Contacts reported a, quote, freight recession. Interesting comment. Rare to see the word recession, but connected with the trucking industry. Interestingly, residential real estate picked up in most districts. Diana Olick has been talking about recent strength in real estate, but commercial construction decreased overall. The office space segment was seen to be a notable weak spot. Several districts reported a rise in consumer loan delinquencies, something to watch with an economy that's slowing down. And budgets of low and moderate income households were said to continue to be stressed. Employment increased in most districts, though at a slower pace than the prior report. Labor market continued to be strong, but there was some cooling reported in labor markets with easier hiring. Some firms reported that they were at full staff now and not hiring any longer. Slower growth in demand. There was slower growth in demand at staffing firms. And importantly for the Federal Reserve, wages were said to have grown modestly. What about prices? Prices overall rose moderately. The rate of increase slowed in many districts. Prices were still moving up, though, due to solid demand and rising costs. But districts reported greater price sensitivity by consumers when it came to buying at the actual stores there. Cost pressures had eased. Home prices, interesting though, and rents both rose. Tyler?
All right, Steve, stick around. We're going to get our panel back. Malcolm Etheridge, Brian Jacobson. Malcolm, let me ask you the simple question. Now, obviously, the Beige Book is a rear-facing review of conditions in April, late March, early April. But given what it says about the state of the U.S. economy, how can I make money right now?
Yeah, I wish I shared Brian's optimism as far as knowing for sure that we're already beyond the recessionary concerns and that we were on our way out of the bear market that we found ourselves in back at the October lows. But my concern is the Beige Book data continues to show that there's pressure everywhere. So when you couple that with the fact that we got JOLTS report data that showed 10.1 million open jobs right now, with the fact that we had the historical unemployment that came out at the last month's print, it makes me a little bit concerned that we may be headed for another raise, which then means that the Fed is basically committed to breaking something, which means that we're probably going to tip back into a recession if we were already in one before. And so I don't know, Tyler, that there's necessarily one particular place that you want to look for as an opportunity to say, that's the safe haven right now, other than maybe like the 3-month Treasury. But I do think that there's definitely going to be quite a bit of choppiness or headwinds or whatever other term we want to use here in the short term as the Fed figures out just how much it has to tighten to bring down wage inflation, which is probably the most important figure in this whole thing.